Shit. Okay, so what did we do? Oh, I left it alone. $1.70, 34, 35, 59, 35, 59. Yeah, no one's gonna buy it now. Alrighty. Good evening, good evening. Oh my goodness, I'm not the only one that's a diehard. Let's go there. Let's go here, and let's go over here. All right, who do we got? Alan Keith. Starry U222. What's happening? Tommy 2. Jonathan. Crude Bunt Cake. Okay. Ernie. Bill. Rich Bruner. I see you beat the wife here tonight. Way to go, bro. There, dude. All right. Forge to Wash. Caricom. How are you today? So, Ed. Joe Berriman. Subby, how's it going? Isaac. Becker Snap. Jess. Toby Whitefield. Find it for less. Yeehaw. Chris. Josh. James David, how are you today? And then we got Bruce. Nick. Apple user. Castle. Everest. Pete the Girl. Okay, Pete the Girl. Ambica. Jonathan, thank you for X. Hey, it is what it is, you know. Hello. Corey Links. Maria, how are you today? Ralph. And Hyank. Okay. Nate Viuenka. All right. Michael, what's happening? Suntime. John. Philip. Ann. Dawkins, Edward, Omar. What trading platform do I use? Hey, Omar, this is Think or Swim with, what the hell is the name of the company? Charles Schwab. Robert, Derek, Joker, what's happening? Shala Shaska, Push, Jimmy, what's happening? Dan, Justin. 225 coin. We just getting started. Okay, yep. Cool beans. Corey, how you doing? Justin. All right. Big what? Big T. What is that? Big what? Big T. Cool beans. Vendetta. Homefire. William. All righty. 5-star. Brian. Shaska, Becky, Brian, Amos, John. Thoughts on ARCC? Jimmy, how are you today? Let's take a look. ARCC. Jimmy, sorry about that, dude. That's going to be a no. Only because, see, I don't like monthly optionable stocks because monthly optionable stocks means I can only do it once a month. And there's only 12 months in a year. So, Jimmy, what if you thought of it this way? Why not ditch ARCC and go with a company that has weekly options? Weekly options, you can do it every single week. Double, even triple the amount of return that you're currently getting. Okay, so think of it this way. An option, if you're doing a covered call, okay, you can average around 1% to 2% every single option strategy. So every time you do one. But with a monthly, you can only do it 12 times. That's only 12 to 24% for the year. Now just imagine, Jim, if you could do it every single week on a company kind of like this one right here. Okay? Every single week it has options. So that means I can get a premium every single week. Poseidon's last Mola, what's happening? Last show of the year. I figure, hey, I've been here. I've only missed 6 days. That's it. Just 6 days out of 365. So that's 359 days without missing a day. All righty. Nick, how you doing? The Oracle, Tim Collins, Missy, James, my own boss, 111. Cool beans. Thoughts on KMI? Pittsburgh Dev. Kinder Morgan. I love Kinder Morgan. So let's take a look at KMI. Kinder Morgan. Well, let's take a gander at it, why don't we? All right, here we are. Here's the high of the year, right around 29. The bottom is right around 16 and a half. Now, last year, we're at 18. Drops down to 16, shoots on up to 29, a little bit of pullback, and now we're settled right there. So before I go a little further, Pittsburgh, let's take a look at the numbers. It's currently at 27.55. So the 27.50 is going between 7 and 33. Well, that is 1%, but we only got 2 days left, Thursday and Friday. There is no trading on tomorrow. I thought you were pulling the TT plug. Too much fun? No, I wasn't pulling the plug. It's just that, I did a whole year every single night, 2.5 hours every single night. I only missed 6 days, all right? So I really like to take some time off. So I'm going to do every night except for Friday night and Saturday night, because those nights really don't pull that much of an audience, and the stock market's closed the next day anyway. So if I go on a Friday night, well, what kind of information can I give you for the next day? Nothing, because the next day it's closed. Okay? Bruce Lee, nice to see you again. One Wheel Adventures. Well, that would be interesting. Alrighty. Neo Crazy Boy 97. How are you this evening? It is the last day of the year, which means after this session, I got to go in and I got to cut and paste all the profit and losses, all that stuff, because on Thursday, everything disappears and they start the profit and loss year to date all over again. So I got to go in tonight, take all the profit and losses, and record them. That way you guys can actually see every single trade that I did this year and how profitable it was. All right, so here we are taking a look at Kinder Morgan. Now, Kinder Morgan is one of those dividend kings, meaning they have increased their dividends. I wonder why X jumped up today. It's a good question. I kind of wonder that one too. But you know what? You can only be at the bottom for so long. You're talking about US. Well, we're not looking at the moment. We'll look at it in a little bit. Austin, what's happening? All right, so let's keep on going. So that's Kinder Morgan. The high right there, 28.15. So the last 30 days with Kinder Morgan, let's take a look. Now, be right there. Okay, here's our last 30 days. 30 days ago was the 30-day high. 2 weeks ago was the 30-day bottom. So you really can't argue with the numbers. It goes from here to high, all the way down to the bottom, then shoots up. Well, it's kind of getting close to the high. Is that Simone? Simone, how are you today? Cody, I saw you sneak in there, dude. How you doing? Kingpin, how you doing? Jason? All right. So here's the high, here's the bottom, here's you going up here. So it kind of makes me a little uncomfortable. Okay, Simone, you want to take a look at Pfizer? Hold tight. So the bottom was 25.80. Well, now we're at 27. That's a $2 increase, which is over 10%. You got a $2 increase in a week and a half. Yeah, you're going to have profit taking, but they haven't started profit taking yet, because today was a higher high and a higher low. So yeah, it's another day to the upside. FX, I don't do FX. Oh, you want me to take a look at the stock, FX. Pablo Estrada, muchas gracias, señor. Please stop what you're doing. Once is enough. I get it. I like it. Thank you. Okay. So that's Kinder Morgan. What do the numbers look like? Okay, 27.55. The 27.50s are going between 7 and 33, which means you can get your 1% for the rest of the week. Okay. Pablo, I'm gonna have to block it, dude. I can't have you doing that. Luz Muriel Donahue, how are you doing this evening? Glad you can join. Had any questions? Let me know. All right, sorry, Pablo, I had to do that. I can't have you clogging up the airwaves with, the exact same thing over and over and over again. All right? Sorry, dude. Optimus, how are you today? Meteor Maverick, Best Bite. Chris, Pittsburgh Deb, glad you like it. Fulvia, how are you? All right, so currently at $27.40 if you like the company. And that's always the biggest question. Do you like it and does it make sense? Well, Kinder Morgan is one of those companies that have been around for almost 100 years, and they consistently increase their dividends. They're actually a dividend king, and that means they've increased their dividends for more than 5 decades. Well, I'm looking for cash flow. This company just so happens to give the profits back to the investors in the form of a dividend. That's what I'm looking for. Am I looking to collect the dividend? No, not really. I'm looking to collect the premium. Now, if you're unfamiliar with what a premium is as opposed to a dividend you collect once a quarter or once a month or whatever the company pays out. Now, you got to remember, companies pay a dividend either once a year, twice a year, 4 times a year, which is quarterly, and then you have a few that pay every single month. Well, this one here pays quarterly, which is every 90 days, which is every 3 months. So if I'm doing it once a month, that only gives me about 12%. But if I'm doing it every week, that gives me about 52%. What ticker? Can't see it on the screen. This is KMI, which is Kinder Morgan. Okay? I like Kinder Morgan. All right. Let's move on. Let's take a look at U.S. Steel because I had a couple of questions on that, and I actually have some U.S. Steel, so I'm kind of curious what's going to happen to it. Alrighty then. Kinder Morgan a year ago was at the high, 48.80. That's the high for the year with U.S. Steel. Okay, bottomed out in the beginning of September at 26.96. Okay, a little bit of recovery. All right, from there, look at the last 30 days. Now, the last 30 days gives us a good window of opportunity to see what's going on. Okay, Mustak, I don't do Forex. No. Bulldog, what ticker symbol for U.S. Steel? X, brother. X. U.S. Steel is X. All right. So, look at the last 30 days. Just about at 42 30 days ago. Big drop. Going sideways for a bit and then dropped again. The bottom was last week. Last Monday was the 30-day bottom. Oh, sorry. The previous Friday was the 30-day bottom right here. On the 20th. Okay? The 20th is the 30-day bottom. 1, 2, about 4 days to the upside, but it is definite to the uptrend area. Now, you're going to make most of your money. I would say this, I say this every night. You make most of your money buying low and selling high. Well, where's it right now? Well, now I had a nice little jump up, but last week was the 30-day bottom. Actually, it was close to the low of the 90-day period. Coach Joel, nice to see you. How are you tonight? Cool beans. All right, so let's keep on keeping on. So I have U.S. Steel at 41. Okay, I sold the 34 calls. Where is it now? 33.99. Is it a prime time to move in on X? That was a couple of days ago. Okay, but yeah, if you still like it. Andrea, I think X might have a little different momentum due to Nippon wanting to merge. Yeah, okay, well, it all depends what old Sleepy Joe has to say about that. Are you really stopping this daily routine after today? No, Joel, I'm here every day except Friday and Saturday. Okay, think about it. Okay, hold on a second. The ticker for U.S. Steel, yeah. Okay, so Coach Joel, think of it this way. There's 365 days a year. I missed 6, so I'm on every single night at 9 p.m., 359 days. Okay. Lindarella wants to take a look at Intel, so we'll take a look at that in a minute. Thanks. But Joel, I'll be here. Okay. I'm just not doing Friday nights and Saturday nights because nothing really happens over the weekend to change anything. So when the market closes on Friday afternoon, well, the numbers are the exact same Friday night, Saturday night, and Sunday night. So, I would like to have some time off. I think that would be nice. I haven't gone out on a Friday night or a Saturday night in a whole year. Well, wait a second. I did go to the hospital one night because I had to drive someone to the hospital. I like the year-to-date movement on X. Well, I like it too. Pretty good way to end the year, I think. Depends. Did you make money? Did you lose money? Don't know. All right. So I like the fact that it jumped up. Great. I would have liked it even better if I rolled it forward before the market closed. That would have been freaking cool. But lo and behold, we didn't. All right. So that being said, I do like U.S. Steel, but I am kind of curious. With a big jump like that today, is there going to be profit taking on Thursday and Friday? And where's she going to close this coming Friday? So remember that little tidbit of advice I give every once in a while. It's not a profit until you take it. So if you jumped in the 30, 31, 32 area, well, the perfect time to take profits. You can always jump back into the position again. U.S. Steel has great premiums, and it's a good company. Well, it's been around for a while, has longevity to it, and it's got a good name recognition. All right. That being said, what else you guys got for me? Okay, Lindarella wants to take a look at Intel, INTC. Okay, so INTC. Looks like we had, I don't know, we had a little bit of an update. Uh-oh, CH, what do you got here? Do they have an earnings coming up? Oh, hold on a second. Let's take a look. Intel. Let's go over to here and put in Intel. Earnings. Okay. Yeah, Intel's earnings is going to be January 30th. Okay, yeah. I'm not too worried about it now. Now, I do have some Intel, but I have no intention of getting rid of it yet. But I might want to think of getting rid of it before the 30th. I don't like any surprises. Now, I'm not quite sure how often does Intel have a surprise. Not like Target. Ugh, that's unbearable. All right, that being said, what else do you have, guys, to take a look at? Oh, hold on a second. Intel a year ago had a high at 50.37. That was back toward the end of January this year. I'm about to say last year because, tomorrow everything will be last year. But anyway, last 90 days. Here we go. Last 90 days. Here's our high right there, 26.48. Our bottom was last week, 18.90. All right. So what do we have for the last 30 days? Well, look at the last 30 days. Now, 30 days ago was the high. The bottom was 2 weeks ago. Now, all last week was 1, 2, 3, 4 days. Well, I don't know if you want to count Fridays being an up day. It's green, but it has a higher low, but a lower high, and it closed lower than Thursday. All right, whatever. It's still green. Still looks pretty. Anyway, Monday was a pullback. Today, she was a little bit higher. So it is going towards the upside, but very slowly. CH. Intel went from a high to a low for the year. Okay, thank you. That being said, some companies do that. They fluctuate up to 50, from anywhere from 10, 20, 50, they even go as high as 50, 70, 80%. That's a big fluctuation between the low of the year and the high of the year. But always ask yourself the very important question. Number one, does it make sense? Number two, do you like the stock? Now think about it before you jump in. Is this something you want to buy and hold on to for the long term? If it is, well, great, and buy it. If you're not sure, well, don't. Don't commit yourself to something you might regret. If you don't like it, if it doesn't make you feel good, then don't do it. That's kind of a weird concept. If it doesn't make sense, don't do it. That's pretty easy. Okay, if U.S. Steel is not something, we're looking at Intel. If Intel is not something you know of, and you understand what it does, what's the high, what's the low, what is the average movement on a weekly, monthly, or yearly basis, and are they consistently increasing their profits, and do they give dividends back to us? Are they increasing those back to us? Okay, there's a lot of interesting questions you got to ask. I like to keep things simple. All right, if it's on the list, great, let's buy it. Dividend kings, dividend aristocrats, dividend champions, dividend contenders, and Warren Buffett's list. And then I have a few others I like to throw in there, just, that I agree with. All right, that being said, let's take a look at something else. Now, I do like Intel. I do own some Intel. Intel had a little bit of an update today, but if you're thinking of jumping into Intel, well, that's a color of a different horse now, isn't it? Do I like VICI? Are you serious? VICI? How long have they increased their dividends? How long have they been in business? Are they even in the dividend kings, aristocrats, or the champions? I don't think so, but we'll take a look. Maybe. All right. That being said, Intel, if you're thinking of jumping in, number one question is, do you like it? Does it make sense? Do you want to hold on to it long term? Now, I don't want to hold on to anything long term. I want to buy something. I want to collect a nice premium every single week until it hits my target. Well, here we're at $20.03. The 20 is currently going for 34 cents a share. That is over 1.5%. Well, 1.5% for a week, well, that's pretty damn good in my humble opinion. I could be wrong, but in my humble opinion, I think 1.5% on a weekly basis is pretty good. Right? So 1.5% is right around, 75, 80% per year? Well, I can live with that. All right, that's Intel. What else you guys got for me tonight? Uh-oh. What do we have? What do we have? All right, we just looked at Intel. Lindarella wanted to see that. Andrea wants to take a look at British Petroleum. Well, I'm kind of curious. When is the oil stocks going to turn around? Or when are? Oh, look at this. British Petroleum went up. Now, we've seen a couple of weeks ago all the oil stocks dropping. But we looked at, was it Occidental Petroleum we looked at the other day that turned around and went up? Well, British Petroleum's doing the same thing. Well, let's take a gander at it. Last year, we were at 35.67. The high of the year, 40.46. Okay, that was back in the beginning of April. From there, she drops down. Take a look. The bottom right here on the 13th of November. And the bottom, 27.82. Okay, well, where are we now? Well, now, last 30 days, take a look. 30 days ago, we're at 29. We shoot up to $30.50, drop all the way down to 28.20, and look at this: 6 days to the upside, and today even gapped up. It was a nice day today. It was, let's end the year with a bang. Well, great. What's going to happen on Thursday and Friday? That's something else to take into consideration. So, if I like British Petroleum, $29.57 is the current price. So if I want to buy it first thing Thursday morning, I can sell the 29.50s for between 19 and 35 cents. That is over 1%. If you don't want to do that one, fine. Go to next week. Next week is going from 31 to 62. That's almost 2%. All depends on how you feel about it. Now, do you want to buy it at the current price and sell at the money, a week out, 2 weeks out? You go 3 weeks out. You go 4 weeks out. Whatever makes sense to you. Okay, I like doing it weekly because it's a habit I got into. Okay, I jump in every morning. I make my trade. It's just a habit. So I'm just inviting you guys along to look over my shoulder and see how I do it. Okay, so Andrea, yeah. I do like British Petroleum, and it is giving a nice premium for the week coming up. A deal. Cool. You want to co-host? I have no idea who you are, so I'm going to have to say no. Sorry, dude. Ryan, what do I think about Kirk? Kirk. Never heard of it. All right. So which one is it? K-I-R-K or is it K-U-L-R? I don't know. Well, let's take a look at K-I-R-K. That's a no. K-U-L-R. That's a no also. Imagine that. You got 2 in a row. Way to go. Mr. Music, how you doing? Mark, Ryan, Marcio, how are you today? GS, Tommy, Evo, Casey, Lime, interesting. Randall Ray, how are you today? It can't drop more than it has. Only surplus. Only surprise will up. Okay. You can for Happy New Year, James. Is your schedule going to be the same next year? It's going to be extremely similar. All right. It's just not Friday night and Saturday night. They can't sell Foundry unless they want the 8.7 billion. Okay. Amazon, Caleb, sorry. No dividends. No, thank you. Amazon doesn't have dividends. It's going to be a no. Joe, Advanced Auto Parts. Now, there's a good one. We haven't looked at that in a couple of weeks. Well, let's take a gander. You ready? Here we go. Our high, what is that, 88? That's back in March. Okay, then we drop to the bottom in late October, and a nice movement to the upside. Look at that. Here's your high, here's your low. Now she's going up. It's actually that easy. Okay, Advanced Auto Parts, number 1. Have you heard of them? Well, yeah, of course. Advanced Auto Parts. They're in almost every major city. All right. That's who she was. She drops down here. Here's our bottom in November. Let's take a gander. Okay, a year ago, we're at 61.40. Okay, then the high of the year, 88.68. That was towards the end of March. From there, just kind of skirting around the bottom. To late October, 35.68. All right. Well, look at the last 30 days. 30 days ago, we opened up at 41.98. Way over here. Shoot up to 49, drop back down to the new bottom at 41, and shoot back up here at 47. Well, why didn't we see this a couple of days ago? Or even last week? Okay, now, unfortunately, we can't look at everything all the time. That's why you guys are here. Okay, if we help each other out, and if we find something that looks good, well, yeah, mention it to us. Now, this is great, but it kind of late. The bottom was here, the 30-day bottom, 2 weeks ago. So why didn't we look at it? Why didn't we look at Advanced? Now, Advanced Auto Parts is on my list. Okay, there's about 300 companies on my list. This is just one of them. So why didn't we see that? That would have been great to jump into 2 weeks ago. Okay, we can't see them all. Okay? I'm going to blame you for that one, Joe. You should have told us. All right, Andrea. As a veteran, are you in the stock market? Thanks for the information. I'm a veteran. Not in the stock market. I'm in St. Petersburg. I'm not quite sure what that has to do with one does with the other. All right. Andrea. Continuing Coles 2 weeks, including the weekends. The stock's up once it gets paid in your account. Okay. Hippie Skipper, Cool Beans, Josh, Corey, and be rad, Daddy. You were here last night. How are you today? Riot, huh? RIOT. Is that a new bottom for Riot today? Well, let's take a gander. A year ago, we're at 1577. We topped out at 1833, and that was the end of February. Well, from there, our bottom of the year in the beginning of September. From there, nice jump to the upside, making a 90-day high. What is that? 1587. Go sideways for a couple of weeks, and look where we are now. All right, we actually have a new 30-day bottom on RIOT again today. Now, we thought yesterday was a 30-day bottom, but surprise, surprise, surprise. Nope, a new 30-day bottom today with RIOT. Okay, if you like RIOT. Now, I do own some RIOT. Am I worried about this? No, not really. Okay, I jumped into RIOT at 1323. Yuck. Okay, 1323. Holy cow, it's way up here, and now it's at 1020. So maybe next week I'll do the 11s. Far enough away? Maybe. Maybe not. Don't know. Okay, Andrea, you had BP at 28. Hold on. 3M had a lot of interesting cases they paid off in court. Is it a good investment long term? Here's the thing, okay? 3M has been in business for over 100 years. They have, hold on a second. Oh, that was a good one. Whew. Shakes you all the way to the bones. Okay, 3M has increased its dividends for 62 consecutive years. I'm kind of curious. Are they still going to be on the Dividend Kings list? Now, they're going to update the list in January. So once they update the list, we'll see. Is 3M still on the list? Or did they remove them? I don't know. I'm kind of curious. 3M, though. It's already on my list to take a look at, so we'll take a gander at it. All right. That being said, Andrea, BP at 28. Wow. Okay. In the 28s. All right. That must have been... Okay, that's not that long ago. I'm not quite sure what you did with it, but I'm hoping you made something good out of it. Holy cow. MPW hit 4 today. MPW. Yeah. It did, but since you pulled back, which is kind of a good thing. All right? 395 at the moment. I sold the 4s for next week. So it's a high possibility that it could be in the 4s by next week, which means I'm going to have to roll it again. Damn. It happens. Okay? So we have a 30-day high at 460. She drops down to 360. Now, that's only $1. But $1 on a $3, on a $4 stock, well, that's 25%. It's a big drop, 25%. And then today, she goes from 360 to 390. That's a 30-cent increase. Now, 30-cent increase on a $3 stock, well, that's 10%. Okay, it went 25% down, and it bounced up from the bottom yesterday to today, another 10%. Well, I just like the numbers. MPW, let's go. Yeah, well, it depends on what your position is. I'm not that excited about it because I sold the 4s. All right? What's it at now? 395. How close is that to 4? Well, that's pretty damn close. Well, this is just part of the game. So stay tuned to see what I'm going to end up doing because I don't want to lose any money. And if I bought MPW, see, right here's the position right down here. Okay? The position's down here, 450. Okay? So I got in at 450, and right now it's at 395, and I sold the 4s. So, kind of curious. Like, 3 positions jumped up today. That's like, make me a little uncomfortable, but we'll see what happens. All right, get that million. Does VIX influence option prices? Yes, part of volatility. Okay, if you really know what makes up an option price, it's called Black-Scholes standardized method for option pricing. Huge mathematical computation that tells you exactly what the options should be priced at. Pierce, Happy New Year to you too. Club Med Tom, how are you? Oh. Dividend. Dividend, you want to take a look at Lode, L-O-D-E? Why does that not sound familiar? Oh, that's why it doesn't sound familiar. Okay, it's monthly. Okay, which means you have an opportunity. Weekly options or monthly options. Now, monthly options, you can trade them only once a month. That means 12 times a year. So you're going to have to get 3 to 5% rate of return each time you do a covered call option with a monthly. And worse than that, here's a 30-day time frame here. Okay? 30 days. Whoops, that's not 30 days. Here's 30 days right here. All right, there's 30 days. Okay, look at it. Up, down, shoots up, pulls back. Great. Now tell me where is it going to be in 30 days? Not that easy. And being this low at 80 cents, I can almost guarantee with a lot of certainty that this thing probably doesn't have 20, it's 2 decades, 20 years of increased dividends. So why are we looking at it? Glam wants to look at JPM. Well, there you go. JP Morgan. Hey, Rodamy, how are you today? So let's take a look at JP Morgan. Here's your high right here. What is that, 252? Bottom way down here, 165. Nice move. Okay, Rotimi Miguel. Just joined for the first time. Well, thank you kindly, sir. Ask away whatever questions that might be pondering upon your brain. Now, we're here looking at dividend stocks, specifically dividend stocks that have consistently increased their payments to their shareholders. That's us, because we're looking for higher and higher rates of return every single year. So, a dividend stock that consistently increases, great. And then we're going to do a covered call against them just before the dividend, and that gives us a safe, predictable, consistent 1% per week, which we all know 1% a week is over 50% per year. That's what we're looking for. So, welcome to the group. All right, that being said, let's move on. So, we're still looking at JP Morgan. Hold on, Glam, we're not done with it yet. Load has no dividends. Thank you, Andrea. All right, JP Morgan. 239, so we'll be looking at the 240s. The 240s are going for 165 to 186. All right, we're not going to get our 1% this week. We got 2 days left, Thursday and Friday. Okay, understandable. So let's look at next week. Next week's 240s are going for 257 to 278. That's over 1%. That's what we're looking for. So a couple of questions. Do I like JP Morgan? Well, of course I do. Do I like it at this price? Not 100%, but let's take a closer look. All right. Now, the low of the year is way back here. In the middle of January, 164. But look at the stair step. 1, 2, 3, 4, 5, 6, 7. Okay, so it stair steps its way up to the top from the bottom. The bottom of the year, 164. Top of the year, look at the last 90 days. Here's the high, here's the low. Look at the movement up, pulls back, now it's going up again. Well, that's what we're looking for. We're looking for companies that made a high. They're getting pulled back because then you have what's called profit taking. Okay, you call it retracement, you can call it pullback, you can call it whatever you want. I like to look at it the way that I like to look at it. Right? So if I'm buying it down here, and it hits 255, I do some calculations in my head. I'm thinking, well, from 220 to 255, that's a $35 increase on a 220 stock. That's over 12% in a month and a half. Well, 12% in a month and a half, yeah, I'm going to take some profits. But that's me. Not everybody's like me. So they start taking profits, so the stock drops. It gets to this point here, and people saying, wait a second. MJ, I don't put them in sectors. Hold tight. I'll get to that question in a second. All right. So from 255 to 230. Okay. That's a $25 drop. Now think about it. $25 drop. Well, from 255 to 230, that's a 10% drop. 10% drop. Well, yep. There's going to be retracement. People are going to, because it all depends on how big of a jump up You have profit taking. How big of a drop down? Well, you're going to have people buying bargains. So if it drops 10% and you like the company, well, I like the company. But ask yourself the question, do I like it at this price? And am I willing to hold on to it and not sell it? So let's take a look at the last 30 days to get a closer view, better idea of what we think is going to happen. All right. So there's the high 30 days ago. She drops. Here's our bottom. We got 1, 2, 3, 4, 5 days to the upside. A little bit of a pullback. See, a little bit of a pullback, and then one day up. All right. So is it going to continue going up, or is this pullback done and over with? Don't know, but we'll find out on Thursday and Friday. Okay. Now, do you like J.P. Morgan? Well, J.P. Morgan at the moment, we're looking at well over 1% if we jumped in for next week. Not this week, because there's no trading tomorrow, which means we only got Thursday and Friday left, and you really can't get a lot of premium with just 2 days. All right. Inspiration Valley, New Zealand. Well, good evening to you. Or is it good morning? Not quite sure. On the other side of the planet. Anyway, Andrea, my friend owns Los. He is way up, but it's Russian roulette. Yeah, okay. I don't like gambling, Andrea. You should know. I don't gamble. I like things safe and predictable. Andrea, so Dividend. So Dividend, it's rolling the dice. Friend graphed it too. Could be profitable, but risky. Okay. Jags wants to take a look at Bud. Oh, okay. Hold that thought. Jag wants to take a look at Bud. Anheuser-Busch. Aren't they? Okay. Well, let's take a look. How often does Budweiser actually increase their dividends? And do they even pay dividend? That's a good question, too. You got to think of it this way. Okay. Why is it not on my list? Well, it's not on my list for... just while we have this up here, what is the book value for Budweiser? All right. $40 for Budweiser. That's not that bad. Historical data. I want to take a look at the dividends. So let's go. Take a look at the dividends. Here we go. Prices only, dividends only. One dividend? Is that right? Oh, yeah, of course not. Silly. Okay, so one this year, May. One last year, May. One the year before, one the year before, one the year before. 2 in 19, 2 in 18, 2 in 17. Okay, so they used to pay twice. Hold on. What the fuck? Oh, sorry. Look, 2010, it was 52 cents. 2011, they doubled. 2012, a nice increase. 2013, another nice increase. The second half of 2013, okay. So in 2010, it was once a year. 11, it was once a year, then once a year. Then 13, it went to twice a year. Okay, 2014, twice a year. 2015, twice a year. It's the same thing. $2, 1.25. $2, 177. $2, 175. $2, 185. So it's slowly going up. Okay? Went 2 times a year all the way up until 2020. Then in 2020, it was just once a year, but they cut the dividends. Okay, so look, in 2019, you're getting $1.12 and then 89. So that's $2 in 2019. You're getting $2 a share. Okay? But what happened in 2020? You're going from $2 a share to 55 cents a share. Sorry, Jags, that's a big fat no for me. I mean, they were doing pretty good. I mean, granted, they only have 14 years of dividends, but they don't consistently increase. All right, so I'm going to say no to Budweiser. Sorry. Okay, you can do 4. wants to take a look at Dollar General. DG, Dollar General. Okay. Dollar General, take a look. The high, 168. The bottom, 68. Oh, sorry, 72, 73, something like that. That's almost a $100 drop. A $100 drop on a $170 stock. Well, we're bottom fishing now because your top is way up here. Well, can it go lower? Yeah, it can. But is it going to? Well, we don't know. So let's keep our eye on it. So she's down here in this area, going sideways basically for the last 4 months. Well, great. Where do we think it's going next? Well, I like Dollar General. It gives me a nice cash flow. So let's take a look at the numbers. A year ago, Dollar General was at 139. High of the year, 168. And then last 90 days, after a big drop, you got a high at 85 and a low at 72. So it goes from 85 to 72, back up to 85, and back down to 73. This is nice movement. Well, what's the last 30 days? Right over here. So let's take a look. Let's zoom in a little closer so we can get an idea of where do we think it's going to go soon. Ooh, look at that. I like that. Check it out. 30 days ago, we're at 77. Jump up to 85. Drop all the way down. Here's your bottom. 30-day high, 30-day bottom. Now she's going up. It's pretty easy to see that one. So let's go over to the numbers. What are the numbers telling me? If I buy it now, okay, Thursday morning, okay, 76.09. Well, the 76 is going 56 to 92. Well, that's nice for just 2 days. All right. Now, because 56 to 92, you might be able to get your 1% for 2 days. That's pretty good. But I want to play it safer. Go next week. The 76 is 132 to 155. I don't know. I think I'd do this week's and then do next week's. You do them separately. Okay. Mike, do you ever have the option executed by the buyer immediately or at least before Friday? Yeah, all the time. Okay. Now, I try to avoid it because once you sell the option, whoever you sold it to can do whatever they want from the time they buy it until it expires. So if they exercise and pull that stock away from you, well, you better make sure you got your profit built into the equation. That's what we're doing here. I kind of want it to be called away. Because if I'm buying it at 76.09, I sell the 76 to someone else and I pick up 90 cents, well, that's over 1%. That's all I'm looking for. I'm not looking for the stock to go up. I'm not looking for capital appreciation. I'm looking for cash flow. My main objective, cash flow. Okay? So I do like Dollar General, and I think I'll write it down for next week. All right, that being said, Andrea, you missed the first question, which was on when stocks actually go up before the dividend date. Oh, well, all righty then. Is it paid in the account, include weekends, or when they call the dividend? Not quite sure. Yes, I did do the call and should make good money on it. Well, cool. My British Petroleum option was picked up immediately, and I even put it over the ask offer order. Well, that's awesome. Okay, how is your son coming along with the thoughts, plans for the new studio setup? Well, he took the day off today because he's young and he wants to celebrate with his friends, so he's not here today. But yeah, we're actually going to start broadcasting to other platforms. So right now we're doing Facebook, Instagram, TikTok, and 2 channels on YouTube. Well, there are a couple other sites that we want to do also. All right. Rich Bruner, you sold the Force too? Yeah, I'm not too worried about it, but thanks for passing along your knowledge. Happy New Year. Thanks, Mike. Andrea, my friend owns Load. He's made a bundle, but he's a risk taker. Yeah, Andrea, there's absolutely nothing wrong with that. I mean, it's great to take risks when you're able to. All right, so I'm in my 60s. I'm retired. I really don't feel like going back to work. I could if I wanted to, but I really don't. So I don't. I avoid risks. I take it simple, safe. Make it safe. Make it a safe trade. All right, Joe Bermuman, Home Depot. Now I do like Home Depot. They've been in business for over 100 years. They are a dividend king, okay, which means they have increased their dividends for more than 5 decades. So let's take a look at the numbers. Home Depot's high is 440. The low is 320. Last year, we were at 335. Shoot up, pull back, shoot up, pull back. We're here now, 393. Actually, I hate it when the market maker does that. See what the bid is? 388 and the ask 393. Well, that's a $5 spread. They're never like that. They're usually 1, 2, 3 cents, not $5. Is that $5? Yeah, that's about $5. Okay, so even if we did the 389s, 390s, not this week, but next week, yeah. Yeah, next week the numbers are there if you like the company. And that's always a big one. So let's check it out. A year ago, 342. Okay, we bottomed out, 323, and that was in the end of May. Look at your last 90 days. There's the high of the year right there, 440. All right, so 3 months ago, 90 days ago, we were right about 370. Shoots up, pulls back, shoots up, pulls back, shoots up, pulls back. Now we are here. Well, let's zoom in, take a look at that 30 days and see what's going on there. All right, here we are, 30 days ago. 430. We shoot up, drop down, our 30-day high, 30-day bottom. She's bouncing off of that, but she pulled back this week. So last week it was 1, 2, 3, 4 days to the upside. And this week, Monday and Tuesday are both down. Well, not down as in lower than the last 30 days, because they are higher than the 30-day bottom, but they're lower than last week. So, do you like this company? Okay, so let's take a gander. Yeah, the numbers are there. What does it usually do this time of year? Seasonality. Okay, take a look at what she usually does at the beginning of the year. Basically just flat. Okay, with an ever so slight tilt to the upside. Well, that's perfect for covered calls and spreads if you know how to do them. Now here, I like the covered call because it's simple and it's easy. AGNC, how are you today? 72141672958855. Interesting name. We should call you Peter or Alfred. We haven't used the name Alfred. We're going to call you Alfred. Alfred wants to take a look at AGNC. Let's get out of that. Go back to standard AGNC. 922. Ooh, look at this. Okay, we're going to have to put this one on the back burner only because here's our high way over here, and it just keeps dropping. We have a new 30-day bottom today. Okay, so tomorrow, remember, when we find a bottom, okay, I like 2 days to the upside. So, no. Okay, but I will keep my eye on it. I'll put AG on AGNC. It's on the list for us to take a look at next week. Andrea, my question is, you said stocks go up 2 weeks before the dividend. Okay, so I was looking at Kohl's 2 weeks before. Does it include weekends? All right. Let's find out and see if I'm right. Kohl's. KSS. Okay, not January. December, there it is right there. Okay, so Andrea, Kohl's, December 24 on the 11th. 2 weeks prior to the 11th on a Monday. So this is 1 week here. The 4th. Okay. So it would have been on the 25th. Okay? So the 25th of November. Okay, so let's go in, take a look at the chart on the 25th of November. Interesting. Okay. Hold on. What was the dividend? 50 cents. All right, so Andrea, you ready? Here's the number right here. Okay, remember, Andrea, the dividend is 50 cents right there. The opening of the day, 1757. All right, so 1757 is the opening of the day. The dividend is 50 cents. So if you take the dividend, 50 cents, add it to the opening of the day, 1757 plus 50 cents, well, your exit price would be 1807. Just remember, whenever you're doing dividend capturing, okay, or dividend capturing 2.0, I like to jump in 2 weeks before the EX date on a Monday. Add the dividend to the purchase price. There's your exit target. Okay, here you go. The dividend on 11th. 1 week is the 4th. So the next week prior to would be the 27th. Okay, the 27th of November. So I want to buy it on the 25th. Here's the 25th right there. Opening price. Whoops, let's go back over to the opening price. Here we go. Okay, opening price, 1757. If the dividend is 50 cents, I add 50 cents to the 1757, which is the opening price of the day, and that means my exit target would be 1807. So, what's the high of the day? 1874. Well over the exit target. Okay, see that? Well over the exit target. So, 2 weeks before the EX date on a Monday. Opening price, you add the dividend in, that's your exit price. So, 50 cents plus the opening price of the day gives you your exit target, 1807. The high of the day was 1874. So you'd be in the morning and out by the end of the day. How much you made in 2024 from trading? Oh, boy. I'm going to give you percentage-wise later on during the week, because today is the last trading day of the year, which means the market's closed tomorrow. So tomorrow we'll have a little bit of a settlement, and then we go starting at ground zero on Thursday. So wherever you see my numbers, okay, see where it says profit and loss year to date? That's going to disappear on Thursday because the new year starts. Percentage, a ballpark, about 2.5% per week, which on one account is over 70% and another account is close to 80%. But then again, I had my straggler, which is the one I picked up in July. That one's only around 30%. But July, August, September, October, November, 6 months, 30% for 6 months. Okay, so not bad. Close to 1.2, 1.3% per week on average. All right. Let's go back to where we were. Okay, it's the 4th, the 27th. No. December. No. Okay. Anyway, hopefully I answered your question, Andrea. All right, Lorenzo, do you have any stock tutorials and options? I'm looking a way to start from zero. Ooh. Now, Lorenzo, you're new here. My suggestion, just a suggestion, keep coming back every day asking questions. I'm here Monday, Tuesday, Wednesday, Thursday. Wait a minute. Sunday, Monday, Tuesday, Wednesday, Thursday, 9 p.m. Okay, no Friday, no Saturday. Okay, how do you pick the strike price? What's the math? Everett, excellent question. Sal, why you make these videos or come live? Just curious. All right, Sal, here's the thing. I'm trying to create a documentation of my trading experience for my children and my grandchildren. I only have one grandchild at the moment, but I'm assuming when I am gone, long, and forgotten, these videos will still be available. So don't take this the wrong way. I'm trying to help out as much people as I can because I don't believe in taking what I know with me when I go to the final adventure. Okay, I'm not delusional. I don't think I'm going to live forever. So the knowledge that I've amassed over the years, I want to pass it along. Okay, I'm tired of the little guy getting screwed over. I'm a little guy. I'm still getting screwed over, but I found a path for me. All right, and I'm just sharing with you guys. If you like it, great. You don't like it, hey, more power to you. I'm not insulted at all. I've been doing this for 20 years. I'm going to continue doing it. The only reason I am here is because someone put a camera in front of me and said, go ahead, have at it. Now I got 6 cameras. So I got a bunch of different platforms, and I got people from all over the world following along. Okay, is it working for all of them? Probably not. Some of them, yeah. A lot of them, yeah. It's not. This is not right for everybody. Okay, and I tell people that. Sal, hold on. Fair enough, brother. You like it? Okay, cool. Now, this is the way I look at it. This is not right for everyone. This is why I tell you, you really want to talk to me? Send me a number. I'll give you a call. Okay, this is boring as hell. It is slow. The profit is very minuscule. Okay? But the nice part about it, it's consistent, it's predictable, and it's safe. I'm 60 years old. I'm retired. I don't want to take risks. I want safety. That's my number one. Safety. I don't want to have to go back to work. Predictability, consistency, and profitability. I've been trading 8 years now. Cool beans. All right? So I've been trading for 20. Okay? So I've seen a lot of crap. Actually, I've been trading for more than 20 because I remember the Y2K crap. I remember that Y2K. I remember what it did to the economy. I remember what it did to the stock market. I remember the dot-com bust. I was in the middle of it. I lost a shit ton. I made a bunch, but I lost a shitload. Huge amount. So actually I've been trading since, I think, 98, 97, 98, something like that. You're Indian. I didn't ask. Okay? Okay. I'm unlike anyone else. I really honestly don't care about ethnicity, color, creed, age. I don't really care. Seriously, I don't. Okay? If you can ask me a decent question, I'll give you an answer. I don't care if you're purple with yellow polka dots. Okay? I don't play that game. You ask me a question, I'll give you an answer. Don't care if you're yellow. Don't care if you're pink, green, orange, male, female. Don't care. Okay? Just be a nice person. That's all I ask. All right. What you traded or specialize in, which instruments? Covered calls on dividend stocks. Okay? I'm looking for a safe, predictable, consistent, simple 1% per week trading strategy. Now, I found it 15 years ago, okay, in 2008. Is that 15 years? Wait a minute. 2008, 18, that's 10, and 16 years ago, 17 years ago. Wow, I'm getting older. This is not good. Don't bring up old stuff. It makes me feel older. I don't want to do that. All right, Everett, how do I pick the strike price? Everett, that's one of the easiest questions I've ever seen. All right? Here we go. Everett, you ready? Uh-oh. K. Hello, I'm 21. In the military with little to no bills. Should that mean I should put in more risk since I have more stability? Okay, so here's the thing, being 21 and being in the Army. I was in the Army when I was 21. I had a blast. I did. Okay, I wasn't as smart as I am today. Okay, I may not be smarter, but I have what's called wisdom. That's something you cannot buy. You have to earn that stuff. All right, so 21 in the military, everything you have is paid for. Think about it. Your overhead is paid for. Your room, your board, your clothing, everything. So you are in a unique situation. 21. Do not kid yourself. I can remember all the way back to basic training. Fort Jackson, South Carolina. You're going to hate me for this. You really are. Fort Jackson, South Carolina, 1981. Air-conditioned co-ed barracks. My friends, we all joined up together. Okay, I scored a little bit higher on my test, so I got to have, this MOS, right? And they got a little lower on their score, and they went to, wait a second, Fort Leonard, Missouri, Quonset huts with a fan. And this was just out of high school. So we graduate high school, 2 or 3 days later we ship out. I go to South Carolina, co-ed air-conditioned barracks. I had a blast. Seriously, I did. I was in the top shape of my life because I was a soccer player. We do those marches and those runs. I was always in first. Sergeant told me to drop and give him 20. No problem, Sergeant. Boom, boom, boom. There you go. Okay? They used to call me spaghetti because I was Italian. Anyway, so yeah, I had a blast in the service. So enjoy the process. Enjoy where you are. Do your service. Okay, but here's the thing. When it comes to money, everything you have is taken care of. So why not take everything, invest it? Because eventually you are going to retire at some point. So if you stay there and invest everything, don't go out drinking, don't spend your money, don't be buying this, don't be buying that, and definitely stay out of relationships. At this point in your life, at 21, you should do everything you possibly can to get yourself stable so that you can stand on your own at some point in time. Now, money's not going to be the answer to all your problems, but it is a huge part of the equation. Because as old man Gump used to say, remember Forrest Gump? He said, yep, one less thing I need to worry about. We bought this fruit company, Apple. Now we got $gazillion. Good. One less thing to worry about. So it's going to be up to you. You decide what you're going to do. You're in a unique situation. We're not all there. KD, thank you for that. So think about it. If everything you have is paid for, dump all of it in. Eventually, you're going to get a nice chunk. And whatever you plan to do with that, that could be your ticket to financial freedom. Now, financial freedom is great. It is. Once you get to a point where you don't have to worry where the next paycheck is coming from, it's a huge burden off your shoulders. But it all depends on what you want. Oh, that was lovely. Okay, so Everett, we're back to how do you pick a strike price? Easy. All right. Currently, Kohl's is at $14.01. Okay, you're welcome. So $14.01. Currently, $14.01. It's right there. How do I pick the strike price? The closest one, 14. Okay. No, I don't want to hold on to the stock. I don't want to look for capital appreciation. I want to pick up that right there. That is called the premium. So if I buy it at $14.01, I sell it to somebody else at $14. I'm picking up 15 cents a share. Now, granted, I will lose one because it's $14.01. I sell it for $14, so I lose a penny per share. But I'm getting 15 cents per share. 15 cents per share on a $14 stock is over 1%. 1% per week is 50% per year. Actually, 52% per year. Simple interest. Compounded, it's about 67% per year. But, it's kind of complicated. Like 67% per year. 50% or more. Okay, but, make sure you choose the right companies. Okay, number one question. Does it make sense? That's number one question. Does it make sense? Number two, do I like this company? Why not swing trade? Well, Sal, I don't like risks, and I don't like sitting in front of the computer. I like quick, simple, safe, predictable trade. A covered call is one of the safest trading strategies there is. Now, when you ask me a question like that, it pretty much tells me you're not retired. And that's perfectly okay for you. Okay, I am retired. Could I go back to work? Yeah, I'm still healthy. I still play soccer. Okay, I'm 60 years old. I'm out there playing soccer with guys in their 20s and 30s. They're a little faster than me nowadays. But I can still pretty much keep up with some of them, which is pretty good for 60 years. But I'm not the oldest one on the field. The oldest guy we have on the field is 74 years old. He still gets out there. Granted, he's not fast anymore, but he can still, maneuver the ball around. Anyway. Alrighty. Alright. Let's keep on going. What other questions do we have? Tony! Hi, James. Can you remind me which column is the amount the option is paying, please? Happy New Year. Okay, Tony. We got a couple of columns here. Bid, ask. That's the options. You also have the bid and the ask on the stocks. Okay? So the bid price is what you can sell it for. The ask price is what you can buy it for. All right. Sal's perspective. Yes, I'm 26. I understand the relevance adjustment strategies relative to age. Well, cool beans. Glad to hear it then, Mr. Sal. If I can help out, let me know. Okay? All right. That answered that question. Okay, Tony, that work out for you? All righty. Andrea, 25 November. Thank you. Okay, now, Andrea, you could look at it two different ways. All right? It was on a Wednesday. Now, you can do Wednesday to Wednesday, okay? The 4th. So, it would be the 27th, would be actually 2 weeks. That's if you're doing just plain old dividend capturing. But dividend capturing 2.0, I do it 2 weeks on a Monday. Because if I'm selling covered calls against the position, well, I want that scenario. I want that 1% every week. Wiser. What's it? Melanated Goddess. That's a cool name. Melanated Goddess. All right. Axel Bell. Flork is a good project. Take a look at it, my friend. All right, you got to give me the ticker symbol because Flork, never heard of it. V10, US Steel. Did you go over this? Rumors are getting purchased. Yeah. Okay. Not quite sure what's going to happen on Friday. They had a nice jump up today. Okay, a nice bump up today. What's going to happen on Thursday or Friday? Is there going to be profit taking or is it going to continue going up? User 5370794888913. Hola. Thank you again for all of this very good knowledge. I am interrupted to learn more. Okay. Ludwin. Well, glad you're here, dude. All right. Wayne shared the live. Encourage more viewers to share. Yeah, don't forget to like, comment, share, all that kind of nice, neat, fun stuff. Sal, covered calls are risk-free. Explain, please. I don't trade options. Okay, Sal, not necessarily risk-free. Everything has risk in life, okay? If you get out of bed, well, you risk slipping, you hit the floor, you slip, and you just keep on going down. Yeah, there's a risk there, okay? If you leave your house, yeah, you have a risk there. If you stay home, well, there's a risk there. Okay, if you stay in bed, there's a risk. You take a shower, well, there's a risk. If you don't take a shower, well, there's a risk there too. Risk is everywhere in life. Learn to see which ones you need to pay attention to and which ones you don't. Okay, so when I say a covered call is not really, it is risk-free, not really risk-free, but listen for a second. Okay, let's actually do a covered call on coals, all right? So here's coals right here. Currently it's sitting at 1404, all right? Now, the bottom was yesterday, so from the way it looks, now this is not guaranteed, this is just the way it looks. You have your high over here, she comes down here, now she's going to bounce up and go to the upside. Normally that's what happens. Normally, because stocks go up, stocks go down. Okay, Sal, hold on. Okay, pay attention. Please, pay attention, please. All right, here's your high, here's your low. So it usually comes down, bounces up, go up. Great, it's at 1401. Wonderful. So if I buy it at 1401, let's actually do a covered call and I explain a little bit more detail. All right. The 14, here it is. I just want to do one contract. Now I'm going to read it to you so you hear what it sounds like. All right. I'm going to, you ready? Buy one covered call of coals. 3 January 25. Well, that basically means this option is going to expire this coming Friday. So whoever buys it from me, they have between whenever they pay for it until the date it expires. Well, this one's going to expire at 3:59 p.m. this Friday. All right. The $14 call strike, remember that's what we talked about. The stock is currently at 1401. I'm going to buy it at 1401. Sell somebody the right to buy it from me. The right, not the obligation. They don't have to if they don't want to. But they're paying me a premium for that privilege. And it is a privilege because, you know, I'm not going to sell it. Here's my commitment. I'm receiving money from it. Okay, I'm collecting a premium. So I promising this guy, I'm not going to sell it to anyone else. I'm not going to do anything else with it. It's yours to do with as you please. You have first right of refusal, that type of thing. Okay? So they have the right, not the obligation, to buy it from me at $14 anytime between now and Friday's afternoon. Okay? The $14 call against the calls at the market to open. Well, my break even is $13.81. Well, as long as the stock stays above $13.81, right there, $13.81, this coming Friday, I'm going to have some type of a profit. If the stock is above 14, okay, whoever bought that option more than likely is going to take that stock away from me. I get all my cash back and I get to keep this, the premium. Now, the premium on this one contract, I just did one so you understand. 1 equals this, 2 is twice that amount, 3 is 3 times that amount. Okay, so one contract, here's the profit. So let's break out our calculator to see exactly what it is. So break even is 13 is like a spread. No, Sal. Spread is totally different. Okay, a spread totally different. We're talking about a covered call. We're buying the stock at the current price, $14.01. I'm selling a covered call, giving somebody the opportunity to buy it from me for the exact same amount I just paid for it. So if I paid $14.01, they're giving me X amount of dollars to buy it from me for the exact same money I just paid for it. So what do I get out of it? I get the premium, and the premium just so happens to be more than 1% of the outlay of money I just had to dish out. Okay? Hold on. Let me go through the mathematical equation. So in what case will I lose? Okay, hold on. The only case you're going to lose is if you, because remember, it's your stock. You own it. You're only selling the opportunity for someone to, here you go. Let's say you got a car sitting in your front yard, sitting in your backyard. You push it out front, you slap a for sale sign on it, $1,000. Great. Joey down the street comes by, says, dude, I'd like to buy your car. Here, take this money, hold it for me until Friday. If I come back on Friday, I will give you X amount of dollars. That's the 14. If I don't come back on Friday, you keep the money I just gave to you, and then you can turn around and sell it to someone else. Okay, so following Monday, you do the exact same thing. So what am I getting? I'm getting the premium. That's all I'm collecting. But I still own the stock. So whoever buys the option, they can buy it from me if they want to. So the only reason they'd buy it from me if currently the price is at 14.01. If the stock jumps up, let's say to 22, well, great. Whoever bought that option from me, well, now they can buy the stock from me at 14, and then they can turn around and sell it for 22. Do I care that it went from 14 to 22? No, not really. Good for you. Wonderful. It works. But what am I collecting? I'm collecting 1875, and we're going to do a little math problem right now to show you exactly what kind of rate of return that is. All right, so the maximum profit. Now remember when I said I want simple, safe, predictable? Well, I already know exactly what I'm making on this trade before I even do it. It's right there. Maximum profit, 1850. Okay, so get my calculator. Okay, put it over here. Clear it out. Now, profit is right there, 1850. 18.50. Now, to find out your rate of return, you take the profit, 1850, and you divide it by the cash outlay for the trade. Well, the cash outlay for one contract is going to be 1,382. So let's divide it out. Okay, divide it out by 1,382 and 15 cents. Let's throw that in there too, okay, just to be accurate. Now, the rate of return, 1.33% for the week. Well, actually, it's just 2 days because this is a weekly option that expires this Friday. So if I buy it first thing Thursday morning, I sell somebody the rights first thing Thursday morning, I collect $18.50. I collect a 1.3% rate of return. Now, here's where you could lose. You ready? Okay, Sal, here's where you could lose. If the stock goes up in value, well, more than likely, whoever bought the option is going to buy the stock. You get all your money back. You didn't lose anything. Okay? If the stock drops or plummets, let's say it drops to $10. Well, now you have a $10 stock that you paid $14 for. Okay, did you lose? Not really. You only lose when you sell for less than what you paid for it. So before you jump into any trade, always keep in the back of your mind, stock prices fluctuate. Some can fluctuate 10%, some can fluctuate 80%. This one here, this one here, the high is 29.60. The low is 13.65. Okay, so let's look at it two different ways. So from the high of the year, 29.60, dropping down to 13.65. That's a $16 drop. That is over 50% drop. Okay, it's over a 50% drop. All right, from the high to the low. But look at it the other direction. From the low, 13.65 to 29, well, that's over 100% increase. Isn't that weird? Same amount. Okay, from here to here, 50% drop. From here to there, it's 100% increase. So, depending on whatever you buy, always remember the 52-week high, the 52-week low. Do a little bit of research before you buy anything. Well, I have 5 simple rules. Rule number 1, never buy something you don't understand. And what do I mean by understanding? You should understand everything about it. What's the high of the year? What's the low of the year? What's the difference between the two? What's the bid? What's the ask? What's the average daily volume? How many shares usually trade on a day? Okay. How often has the company increased their dividends? Do they even have dividends? Do they have options? Are they weekly? Are they monthly? These are questions you should ask before you jump into anything. Now, the stocks that I like, 20 years, that means that's 2 decades, 20 years of increased profits. Okay, we checked yesterday, 9,848 companies available in the stock market. There could be more today. I don't know. The number changes every week. All right. That's how many companies are available that you can choose from every single day. So which one do you pick? Me, I like to get that list down to as small as possible. So I got 2 criteria and only 2. That's it. 2. Consistently profitable, more than 20 years. That's 2 decades. And weekly options. Because when I say I want a simple, safe, predictable, consistent 1% per week, the only way I'm going to get weekly cash flow is if I sit in front of my computer every day and trade. Yeah, no thank you. That's not what I want to do. I want to be on 10 to 15 minutes, make my 1%, be on my merry way. All right. Sal, so is it negative risk to reward because my upside is limited, but the downside and is exposed to volatility? Well, here's the thing. Okay, can it go down? Yes. Can it go up? Yes. Is it going to? Yes and yes. Okay, that's all stocks do. They go up, they go down. They go up, they go down. They go up, they go down. That's all they do. So where you jump on the merry-go-round, picture this. This is the merry-go-round right here. Where are you jumping on? Are you jumping on as it's dropping, or are you jumping on as it's going up? All right? Always make sure the trade makes sense. If you buy something, if I buy it at $14.01, which is the current price right now, I have no intention whatsoever to sell at a loss. That's me. Now, some people panic and then they sell at a loss and they say, you know what? I'm getting out before it drops to 0. Well, you should have thought of that before you jumped in. Rule number 1, never buy something you don't understand. Okay, if you think there's a slight possibility that might go bankrupt, read the news. Okay, if it's in the news, well, there's a good probability that it might be something up. All right, so let's keep on going. La 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 la. Edwin, thanks, share. Yep, like, subscribe, share, all that kind of nice, neat, fun stuff. Let's keep on going. Everett, thank you. You're welcome. Where was I? All right. Tony, bid. Yep, there you go. David, good evening. Is Walgreens still a good stock to do a covered call? Hold on a second. Demolition Duel, how are you this evening? David, let's take a look at Walgreens. I like Walgreens. Believe it or not, I still have some. Now, I used to have Walgreens in every account, but a lot of them got taken away. So I only have it in one account now. Wait a minute. 2 accounts. All right, so all the other ones got sold out. All right, Walgreens, here we go. WBA. WBA. All righty. Now, this is one. Greetings from Arizona. Well, how are you in Arizona? All right. Walgreens, our high was right on 26. That was a year ago. She drops. Our bottom is in November. We're currently at 933. Now, I do have some Walgreens, just to let you know. Sal, what's Sal saying now? But I negative RR will have a good win percentage, but when it doesn't, it wipes out years of progress. Okay, Sal. It doesn't do it for me, so I'm not quite sure how that works for you. Because I've been doing the same strategy for 15 years. I don't buy anything long term. The longest I've ever held anything is 9 months. Okay, and I didn't lose money on it. You know, I bought it, Kimberly Clark last year, It dropped, went sideways a little bit, finally came back up, and I was finally able to sell it at a profit. But while I held it for 9 months, I collected 3 dividends and 35 premium. 35 weeks. That means every single week I get a premium and the 3 dividends. And then I ended up selling for a profit afterwards. Okay, stocks go up, stocks go down. And never buy something that you think might go down. And if and when you do buy something, be okay if it drops 50 to 60% of the value of what you paid for it. Because that's what they do. Look at this one here, Walgreens. The high is 26, the bottom is 9. Okay, that is, from a drop point of view, that's a $15 drop. $15 drop on a $26 stock, well, that's more than 50%. Thanks, man. I really appreciate you took time to teach. Well, that's what I'm here for. Okay? So, that's the drop right there. So ask yourself, do you like Walgreens? Well, do a little bit of research on Walgreens. Now, we had somebody do a very comprehensive deep dive research project on Walgreens. 8,700 stores, 8,700 stores worldwide. They have products. Walgreens owns some products that are sold, I think it was in 22,000 stores worldwide. 22,000 stores worldwide has products that are owned by Walgreens. Now, also, Walgreens has been in business for over 100 years. So, are they going to disappear? Probably not. They're having a tough time. And why are they having a tough time? Well, because the current administration does not want to prosecute theft below $900. So it's like a free-for-all. People waltz in, grab some shit, and leave. Call it snatch and grab. They're not going to prosecute. They're not going to chase people down. This is the instance where I like the medieval times, the medieval laws. You get caught stealing and they cut off your hands. How many people, think about it, seriously. You don't like capital punishment? Can't help you out. But here's the thing. How many people, how many one-handed people do you have to see to think to yourself, it might not be a good idea to steal? Okay? Might be. I don't know. Let's keep on going. Alrighty, John. Oh, wait a second. We're still looking at the idea of a covered call on Walgreens. Okay, so the high, Walgreens, $25.91, drops. Here's the last 90 days. Take a look. Okay, up, down, big jump up, down. Here we are right here. Okay. Does it look like it's a good time to jump in? Well, this doesn't really show you. Now, let's jump into the 30 days, the last 4 weeks. 4 weeks. Last 30 days. Okay, so here's the last 30 days. Here's our bottom, shoots up, pulls back, back up, back down. We're closer to the bottom than we are to the high, so we have a lot of space to go up here. Here's your bottom here, but not a real good roadmap. That's a good one. Not a real good roadmap to where we think it's going next. Gunner, how are you doing there, dude? Gunner, what's happening? So think of it that way. Is it? Yeah, it could be. Okay, the bottom is here, the top is there. Where does it look like it's going? Well, it looks like it's still going down. So maybe you might want to wait a little bit longer for it to turn around and go back up. By the way, you name a ticker, I'll tell you. All right, by the way, you name a ticker, I'll tell you what's going to happen next in medium to long term with absolute certainty. Well, jolly good. I hope that is true. That'd be helpful. All right, John wants to take a look at Mickey D's, MCD. All right, Mickey D's is a little bit of a pullback. Okay, look at your 30-day high. Now it's dropping. It's actually stair-stepping down. All right, so it's still coming down. Your bottom is way down here. Okay, so it's still coming down. It hasn't found the bottom yet to turn around and go back up. That's just my opinion of Mickey D's. Okay, when looking at the long term of stocks, Do you do any technical analysis using indicators, or is your strategy more fundamental analysis based on the economy? Okay, that's a very intelligent question. Cool beans. No. That's a simple answer, isn't it? No. Let me explain. All right. Now, I created this trading strategy in 2008. Now, you're new here, so I want to show you something that you probably haven't seen before. I'm going to go to my YouTube channel. I'm going to show you a video that you might find rather interesting. All right. Oldest video. This one was done 14, 15 years ago.
And as you being part of my internet website company, which my dad doesn't like call that, but I do. Being part of that, you're going to be getting weekly lists of stocks I'll be trading, and every month you're getting 4 lists of stocks that you can choose from that will help you get the best return every month.
As me, 15 years ago. That part always cracks me up. I always watch that video and I always go to that part because I like to get that little smile on my face. So that was my daughter, okay, when she was 9 in 2008. Now, I will admit this was 11 years ago, 12 years ago, where she's 11 years old. I first started teaching her when she was 9. When she was 9, she jumped off my lap. She said, "Daddy, can you teach me what you are doing?" Okay, so teaching a 9-year-old how to invest in the stock market, it had to be simple. It had to be safe, predictable, consistent, and no way that she could lose. So I had 5 simple rules. And it took me a while to figure out. It wasn't like, oh, here's one. No. It took me a while. I had to do some deep digging. Hold on, Sal. Let me finish going over my explanation first. So, simple, safe, predictable, consistent, no way for her to lose. So I come up with 5 rules. Simple rules just to keep her on task, keep her on track. Rule number 1, never buy something you don't understand. Well, for her, for my 9-year-old daughter, hold that thought, it was, hold on, I don't like that list. Let's go to another list. There you go. All right, for my 9-year-old daughter, it was never buy a stock that's not on the list for the week. Okay, what does that mean? Here's week number 1. All right, that's November 24. All right, here's week number 1 of November. Here's the stocks. Never buy something that's not on this list. That was for her. Okay? Here's week number 2, week number 3. So if it's not on the list for the week, it's a no. Plain simple. So, but for you guys, never buy a stock you don't understand. Same thing. Okay? But for her, it had to be really simple. That was it. If it's on the list, take a look. Number 2, rule number 2. Never sell at a loss. It defeats the purpose. Rule number 3. Consistently profitable companies only. Now, I like 20 years of increased dividends. The dividend is a portion of the profit. If the dividend increases, logic, common sense tells me that if the dividend is increasing, the profit is increasing because the dividend is a part of the profit the company gives back to us. Okay, so if the dividend increases, profits increase. 2 decades. Rule 3, 2 decades of increased profits. 4, weekly optionable stocks only. I want weekly cash flow. That's part of the rule. Weekly cash flow, weekly options only. And rule number 5, make sure the numbers work. Now, what do I mean by the numbers? Well, right here. What am I buying it for? What's the closest strike price? What am I selling it for? And is that over 1%? Now, the second part of the numbers is the chart telling me it's the right time? Well, here's the 30-day high. Here's the 30-day bottom. She went up. Now she's back down again. No, it's not right this time for this company. So everything else is yes, but this is telling me she's in a downtrend. No. See, just because the numbers are right doesn't mean it's a yes. Everything has to be in order. Okay, that was created for a 9-year-old. Simple, safe, predictable, consistent, no way for her to lose. That's what the strategy was. Specifically made for a 9-year-old. So, when I say simple, we did not have a lot of indicators. We had 2. That's it, just 2. Consistent profitability, weekly options. That's it. And then we looked at the chart. Where's the high? Well, the high of the time frame tells you, because you and I, we are the buyers, we are the sellers. We come up with this crap, believe it or not. We say, oh, this is too high, it's not worth this, and then it doesn't go any higher. Or, oh, look at this, I bought it down here, now it's down here. I'm going to take my profits before they disappear. Because stocks go up, stocks go down. They don't do anything else. If you're expecting McDonald's stock to come to your house and take your dog for a walk, take out the trash, rake the leaves, empty the trash, no, ain't going to happen. They go up, they go down. And guess what? Then they do it all over again. They go up, they go down. They go up, they go down. They go up, they go. That's all they do. If you're expecting them to do anything more, no. It just doesn't. Okay? So, simple, safe, predictable, consistent, no way to lose. Make sure the company, you understand it. Never settle a loss. Consistently profitable, weekly options, and then double check the numbers to make sure everything works. Okay, Sal. I predicted Tesla, weekly bottom, natural gas, and Bitcoin. It's all documented in TradeView. Well, good for you there, Sal. Awesome. All right. Secretariat. I haven't heard from you in a while, dude. Glad you're still okay. That move in X was a godsend for some and a pain in the ass for others. My calls are short at 34. Well, mine are at 34 also, dude. But here's the thing. Okay, let's bring up X for a second. Here's my assumption. Okay, now, I think, okay, I could be totally wrong, but here's what I think. Here's your high over here, your 30-day high, way here. Here's your 30-day bottom right there. We went sideways for a bit, and then you had a big jump from 31 to 35 and a half. That's a big jump. Look at all the volume. Pretty much, okay, and here's the sad truth about it. I think there's going to be profit taking Thursday and Friday. That's what I think. Because I think that is too big of a jump in one day for people not to take advantage of it. Look at all the other days. Not very much movement whatsoever. Okay? Not very much movement each day. You got a big movement like this, especially to the upside, yeah, more likely to be profit taken on Thursday and Friday. Which is fine. If it does, great. If not, that's good too. But currently it's at $33.99. I also sold the 34s. So I'll be on there Thursday morning saying, all right, what are we going to do? Is it going to be profit taken? Is it not? So yeah, and if so, first thing Thursday morning, I'll be rolling that baby into next week. And let's just kind of check what would that look like. Okay, here's X right here. View trades. All right. So I sold it for $159. Okay. That was back last week. And now it's currently worth $170. Not a huge jump in the option price. But let's see what it looks like if I want to roll it forward. And I'll explain to you what rolling forward means. Holy, yep, I'm going to roll this baby forward. Hell yeah. All right, hold on, look. Okay, what rolling forward means is I've already sold the 3 January option, giving somebody the right to buy it from me at 34. Well, my entry price is 41. I definitely do not want to sell it at 34. But I picked up $1.70. Okay, now I own a bunch of shares in this account. That's a nice fat profit. So hypothetically speaking, if Thursday I jump in, buy the 3s, sell next week's, which is the 10. I could pick up another $2.58. Now, I know that doesn't sound like a lot, but take a look right here. Okay? My trade price right there, well, I'm into it at $41.25. Okay? Which means if it sells, I'd be losing a lot. I don't want to do that. So if I roll it forward, I gain another week, and I also gain another $2.58 per share. How many shares do I got in this account? Well, in this account, there is 3,200 shares. So let's bring up the calculator. Okay, so here's the calculator right here. Okay, so if I roll this forward on Thursday, pick up $2.58 per share. Okay, $2.58 per share. There's 3,200 shares. 3,200 multiplied by $2.58 a share, multiplied by 3,200 shares. Grand total of $8,200. You damn well straight I'm going to roll this thing forward on Thursday. Okay? Even if I have to take less than 258, I'll take two. I'll take $1.50. Okay? Still 3,200 shares. Even though I still own it at 41. Where is it? Right here. 41.25. Okay? I don't think it's going to hit 41 by Friday. But, it's currently at 33.99. So, that's a little close. So you want to ask what happens if the stock gets too close on a stock that's actually down? Because I bought it at 41, and it currently dropped yesterday. Oh, hold on a second. Let's get rid of that. Okay, yeah. So I bought it way over here. Okay, at 41. The bottom last week, or 2 weeks ago, on the 20th, was 29.71. So while it was here on Monday at 31, okay, Monday was at 31 when it opened up Monday. Actually, I sold it on Thursday. Yeah, I sold it on Thursday. I rolled it forward, and I picked up that 158. Okay, so it's not just what position are you in. It's like, how much time and effort do you want to continue to look at your position? Well, okay, Secretariat, you've seen it also. I mean, you've been here since, I think, February. You've been here quite a while. You jump in some, you don't do others. And every once in a while, you and I are toe-to-toe. Well, we're on the same position, almost the exact same position with U.S. Steel. I jumped in at 41. I sold at 34. So did you. Okay? But look what else I picked up on U.S. Steel. Okay, when I originally jumped into U.S. Steel, here's the date right here. December 2nd. So I got it at the beginning of December. So what did I do? Well, first I bought it at $41.25. I picked up $2.64 a share, which is about $8,000. So I bought $8,000 here. And then on the 13th, okay, a week later, I sold 32 contracts at 147. And then I got 44, and then I got 169, and now recently I just got 104. So if I do it again on Thursday, I'll pick up another 250 something. That's a lot of money. Well, look at it. There's 1, 2, 3, 4, 5, 264, 5, and 265, 775, somewhere in that area. So I made $775 in premiums since the beginning of December. But that doesn't offset the fact that I bought it at 41 and now it's at $33.99. All right, is what it is. I have no intention on selling it. I will keep rolling this thing forward. And I will keep rolling it forward until I'm in a very nice, profitable position. All right, that being said, let's get out of here. Let's go back to this one and take on some more questions. Rich Bruner, I'm having a pity party as my valuation on my portfolio is down 12%. Patience is a sucky virtue. Okay, Rich, you were doing really good a couple of weeks ago. What happened? I'm kind of curious. Have you unfollowed Vex Bolts? No idea what Vex Bolts is. Like ARB, O Realty? Hell no. Okay, dude, seriously, look at the numbers on O Realty. No, no, and double no. Okay, number one, it's a monthly optionable stock, which means no weeklies, no thank you. Let's keep on keeping on. Oh, I'm missing all these questions. Okay. Get that million. What is profit? Earnings per share? No. A profit is a profit. Well, if you're looking from the corporation's point of view on a profit, yeah, it's earnings per share. Okay, so you're right about that. Happy New Year. Thanks for doing what you do. Pink-haired liberal. Wow. Don't get me started on politics. Hi, what did you trade today? I didn't trade anything. I didn't trade anything today. I traded yesterday. What happens when no one takes the call within the week? Ludwin, that's usually not an issue. Because here's the thing, and not many people take this into consideration. All right? If the market maker posts the price, he is required by law to fill it at that price. This channel is going to skyrocket with your teaching methods. Well, KK, thank you very much. All right, I'm going slowly. All right, I'm in no great hurry to get from here to there. Just slow and steady wins the race. That's what I like. All right, so as we were saying, Ludwin, if the market maker posts it for sale at that price, at the market, so there's a huge difference between a market order, which is what's posted here, and a limit order. A limit order, the market maker doesn't have to do squat. He can take a look at it and say, yeah, I'm not filling that. But a market order, he's required by law to fill it. All right. How often do you live stream like this? Every day. Unfortunately, it's 5 a.m. for me, but I'd like to tune in more of your live streams. New to your channel, and I like to share with my friends too. Kay, cool beans. Here's the thing, Kay. Believe it or not, I have 2 YouTube channels, and they are both live. Hold on a second. I'll show them to you right now, if I can do it real quick. All right. 2 YouTube channels. 1, all just a screen, and 2, me standing in front of the screen, basically what you're seeing here. So me standing in front of the screen is one channel right there, and just the screen itself is another channel. Because you probably cannot see these little tiny numbers on your iPhone or your iPad. That's why this is live on YouTube, so you can pull it up on your computer or on your big screen TV. Makes it easier to see the numbers. Okay, so that's why it's live. And they're all recorded. So if you go back to YouTube, all right, live right there. Okay, these are the 2 that are open right now, this one and this one. This was 12 hours ago, did that one. A day ago, week ago, okay. See, these are all the live ones I've done, and there's about 600 or 700 of them. Because remember, 2 a day for the whole year of 2024. All right, let's get out of there. Don't need to see sound, none of that. No how. All right, let's go back to here. And 11:06, we got some questions to answer. What happens when no... Okay, we already did that one. Encourage more viewers to share. Yeah, like, share, comment, all that kind of nice, neat stuff. C31A. Devil Dell 82. I have no idea what that means. I've been playing with it for a couple of weeks. All right. Lower high. No way. All right, Tony. Do you need a lot of money to do a covered call? No, because they have stocks all the way down to like $1 or $2 or $3 that you can buy and do covered calls on. David, glad you like it. Chicken and biscuits. Gotta love it. You need to own at least 100 shares to sell one covered call. He's right. Joe Levi. Joey Levi. How much time a week should someone dedicate to this investing strategy? I spend about an hour a week. Okay, 10 to 15 minutes a day. So 10 to 15 minutes a day. I do most of my time on a Monday and a Friday. Monday is when I do most of my trading. Tuesday, Wednesday, Thursday, I just take a quick look and see where it is. Okay, today's Tuesday. Well, take a quick look. All right, now let's do a quick look on Thursday. Friday is a little bit more complicated because then I can do some math. It's like, what did I buy it for? Where is it at now? Should I let it go? Should I roll it forward? A lot of questions you got to answer on a Friday. All right, so let's keep on going. Thanks. That's what I thought. So you do a covered call after you own 100 shares. Yep. At least have the value of the shares in your account. That's a good idea. It all wrong. William thinks it's all wrong. All right, William, thank you for that. If you think it's all wrong, love to hear your idea. Are you selling the whole stock? Not quite sure what you mean by that. Lloyd, so grateful for your guidance. All righty. Does he read chat? Busto, yes, I do. Unfortunately, Busto. Okay. Understand this for a second, Busto. You ready? The chat. Facebook, Instagram, TikTok, YouTube, and then another YouTube channel down here. So answering every single question takes time. So can I do it as fast as you guys type them up? Nope. I admit it. I don't go as fast as you guys do. So on your screen, you'll see all the chats going, fast. Me, I stop them so I can answer each and every one at a time. All right, so I do answer each and every one. Don't. Joey, how much time a week? Okay, got that one. Chicken biscuit. Yep, all wrong. Yep, William said it's all wrong. Grateful for your guidance. Thank you. Are you selling the whole stock? Not quite mean by that. Busto, yes, I do read the chart. Which X calls you thinking of selling? The January 10, what price? All right, Secretariat. Okay. Now, with my U.S. Steel, all right. Oh, wrong one. Okay, so with my U.S. Steel, all right, I had 3,200 shares. I sold January 3, which is this Friday's. What's your take on 50-cent stock? I don't do penny stocks. I don't. Dividend kings, dividend aristocrats, dividend champions, so on and so forth. Companies that have 2 decades of consistent profits. No, I don't do small stocks. They got to have 20 years of consistent profits. Penny stocks don't have that. All right. So currently I have the 24. Now let's see if I want to roll it forward, and if I do roll it forward, what are my opportunities here? Well, okay. If I do 34 for 34, okay? If I buy back this week's 34, right there, and I sell next week's 34, I can pick up 258. Well, let's say hypothetically I want to increase it. All right, so I want to sell the 36s. Okay, so I change this here to 36. Well, if I change it to 36, I'm gaining $2 on the stock price from 34 to 36. Well, that's good. But I'm getting a decrease from 258 to 185. And I might actually do that. Sean, so how did you trade before you taught your daughter the method? I did a lot of options and a lot of spreads. Okay? Now, I did make a lot of money in spreads and options, but I also lost a lot too. In Nuvu stock, I bought 1,000 shares at 30. Okay, I never heard of them. Sorry. I never heard of them. I don't do them. Are you selling at the money? It depends. I prefer in the money, but I'll do it at the money. In the money, it's a safer trade. At the money, it's higher profit. But I will buy go the profit for safety if I can get my 1%. Safety, predictability, and consistency. That's my top three. Safety's number one. Okay. In what time frame period do you sell options? 1 week. Every week. Weeklies. I want weekly cash flow. I don't want monthly. I don't want quarterly. Weekly. All right. Busto, can you name the only country that starts with O? That's a good question. Not off the top of my head. All right. Is your goal to have the shares be called away? Absolutely. Okay, if I buy them at 14, I sell somebody the rights to buy them from me at 14, and I collect the premium. If they get called away, I get my $14 back, and we do the whole thing again next week with something else. What's a good $10 stock? And what's your lowest? Alpha Energy. Well, how are you? Interesting question. Let's take a quick gander. Now, Oman. I never would have guessed that. But thank you for the answer. Oman. All right. Watch list. I don't want this list. Oh, wait a second. Yeah, let's do this one. Get rid of that. Let's go this, and let's do that. There we go. Alrighty. This here, okay, this list here, this stock list. Oh, wow. Here's the prices. Now, these all have weekly options. Okay, this is the CBOE weekly optionable stock list. So they have them all the way down to $1.07. Well, actually, holy cow! How can you do a dividend? I mean, a covered call on a 50-cent stock, 60-cent stock, 80-cent stock, $1, $2, $3, $4, $5, $7, $10. That's quite a bit of them. That's a lot. Okay, can you see the names? HBI, UAA, VOD. That's Vodafone. Peton. That's Peloton. Vale, SSYS, GT. What the heck is GT? I don't know. A person. Of course, if you're losing a trade like US Steel, your goal would be not to have the shares called away at a low price. Absolutely. Okay, so depending, you can see it. Okay, there's a whole bunch of them. You go to the CBOE and look at all the weekly optionable stocks, and then find out all those under $10. You're welcome. Not that I'm suggesting you do those. Alrighty, so let's go back to where we were. All right, here we go. So let's finish up some of the questions. We got 15 minutes left. I like to get to all the questions. All right, your initial cost on US Steel is 39. Mine's 41. Okay, so you sold the 34s. I sold the 34s. You're in a better position than I'm in. Where do you find the book value, Tony? Hold on a second. Neo Crazy, you're back. Cool beans. Okay, so Tony, where do you find the book value? You find that over on Yahoo Finance. Okay, go to Yahoo Finance. Over here in the bottom left corner, way over here, where it says statistics, right there. See, it says statistics. You click on statistics. Okay, slide all the way down, almost to the very bottom. Book value. Budweiser has the book value of $39.82. The current stock price for Budweiser, $50. Now, I don't mind $50 if the book value is $40. $39.82, come on, that's close enough to $40. But here's the thing. Nvidia is a $140 stock. Its book value is $1.74. NVDA. Okay? Nvidia Corporation, $134. Okay, slide all the way down. Okay? Book value per share, $1.74. What's the dividend for? Sorry, I can't help but laughing. Okay, come over to here, come down just a little bit. Historical data. All right, historical data, NVIDIA, here we go. Dividends only. 1 penny. Seriously, 1 penny. That's it. Okay, so you like NVIDIA? Great. It's worth $1.74 and the dividend's 1 penny. Yeah, it's not on my list. All right. So Secretariat, the X calls on Powell to be selling for January 10th. I might go up to the 36. I'm not sure. I like to see what happens on Thursday and Friday. Okay, so as soon as Thursday comes, all right, first thing on my list, what I want to do is I want to roll it forward Thursday morning. But before I do, I want to see where she opens up. Is she opening up higher or is she opening up lower? Either way, I'm still rolling it forward. It's a little too close to the 34 for me. For your information, my initial card, yep, we got that one already. Okay, thank you. I think I have a ways to go before I can try covered calls. Chicken and biscuit, no problem. Shark, what's happening? I have Vanguard account. Do I need a Schwab account? I want this. Ludwig. Okay, this here, okay, this is Charles Schwab. Okay, this is called Think or Swim. And you got to go through Charles Schwab in order to be able to use it. Okay, now I don't get anything from it. I've just been using this trading platform for about 20 years. Now, 20 years ago, it was owned by Tom Sosnoff. He was the guy who created a professional trader. Okay, a professional trader made this trading platform. He sold to TD Ameritrade, and they were bought out by Charles Schwab. How many Charles Schwab accounts can you have? You can have as many as you want. Okay, I think I have 3 or 4. Yeah, then I have a couple Robinhood. All right, I have Vanguard. Okay, also. Okay, great. Secretariat. Okay, thank you for the wisdom in 2024. Signing off 24/4. See you next year. Yep. Yo. W, what's happening? Would a company need to be close to the EX date before you buy? Yeah, I like 2 weeks. Oh, my hair looks terrible. Funny thing, somebody asked me if I had a toupee. It's like, really? Seriously? I almost forgot. Happy New Year. Thank you. Okay, WW Coca-Cola. Really? We got 10 minutes left? And that's all the... Holy cow. That's all the questions. I'm actually done with all the questions. Cool beans. Alrighty, let's take a look at Coca-Cola. Why the hell not? Alrighty, Coca-Cola. Okay, is that platform free to use? Yeah, you can use it for a short period of time. Now, Charles Schwab would like you to move your account over to them for the privilege of using this, but you can use it for 30 to 60 days for free. Okay? Okay, I remember one year, many, many years ago, I still wanted to use it, and I made some stupid decisions, so I put $50 in, so I was able to use it. Well, things are a little bit different now, but okay. So Coca-Cola, here we go. The high, 73. That was in August. The bottom, 58. So your difference, 58 to 73. $15. Okay, $15 on a $58 stock. That's over 20%. That's a big move. All right. However, look at the last 30 days for Coca-Cola. Okay? Last 30 days for Coca-Cola. Here's your 30-day high. Here's your 30-day bottom. She dropped, retraced, coming down. We have a new bottom yesterday. Today was a little higher. We have a higher high and a higher low. But she closed. Okay, anyway. 62.27. Closest one is going to be the 62. And it's going for 42 cents. Not even 1%, but you're going to lose 27 cents right at the top. So let's go to next week. The 62 is 81. You take 27 off there, you're still not getting your 1%. Don't get me wrong. I like Coca-Cola. They've been in business for over 100 years. Okay, they're a dividend king, an extraordinary dividend king. But still, no. David, thank you for that. Hope you're all doing good. You guys have nothing else to look for. I can bug out early. That works for me. So I hope you're all doing good, and we'll catch you again next year. Now, remember, I'm not going to be doing Friday nights and Saturday nights, but I will be on every other night, okay? Every night. I find options kind of confusing. What do you think about trading NQ futures? No, you think options are confusing? Dude, simple. Take a look at Coca-Cola. Coca-Cola is currently at 62. Great. Let's say I buy it at 62. I can sell somebody the rights to buy it from me for the exact same price I just paid for it. Collect a premium. Simple. Easy. Not that difficult. Okay, stock goes up. Great. I get my money back and I get to collect the premium. I'm looking for 1% a week. 1% a week is over 50% per year. All right, Chicken and Biscuit, thank you for that. Thank you, Jim. Can you explain it why you take 27 off the top? Oh, okay. Can I explain why I take 27 off the top? Okay. If I'm buying it for 62.27, listen closely. If the current price is 62.27, if I sell it to somebody else at 62, I'm losing 27 cents. So to take the 27 cents out of the equation to make it easier, you got to subtract it from what you're collecting. So if I'm collecting 42, I got to subtract 27 out of that to give me an idea of what my rate of return is going to be. But if I buy it at 62.27 and I sell the 63s, I don't have to do that. Got it? So whatever you're buying it for is your entry price. Come to the freak show. Your entry price is 62.27. That will never change when you enter. When you enter the freak show, whatever you want to call it, whatever you call it, the purchase price is your entry price. That's what it is. So, do you want to sell the 60s? Well, great. Do you want to sell the 65s? Well, you can do that. But it always comes down to, what are you buying it for? What strike price are you choosing? And then what are you collecting? Okay, am I collecting 1%? If I'm not collecting 1%, don't want to do it. There's, like I said earlier, 9,848 different companies you can choose from any day of the week. Okay, that's a lot. The only ones I like, consistently profitable and weekly options. And that's only about 300. Hell of a lot easier looking at 300 than it is looking at 9,848. All right. You guys have a great day. We'll see you again Thursday night. I don't know. I might do tomorrow night. Not quite sure. Start the year off with a bang. Woohoo! All right. Catch you guys later. Have a wonderful time. All righty. And we are done here. Yep. KK, good to you. Done there. And done there. And done there. Done here. See ya. And done all the